The stock market started this year strong. So is that a signal for even more upside over the near term? Well, our chief equity strategist and economist, John Blank, will know the answer to that question and others, and he's here with me now. John, what do you think? More market upside in the offing?
Well, Terry, to get to the point correctly, we need to discuss forward valuations in this market. And I actually did this morning, but this is current information as of March the 28th. And what you learn is that large cap index on a forward PE ratio for 2024 is at 22.1, and it's at 19.5 on 2025. So basically 20 or 22 times earnings when the average in history is around 17 over the last 5 or 10 years. So what that means is this market is anywhere from 15 to 25% overvalued. And why that is because people are momentum trading it. And what you do when you momentum trade is you buy the highs of a stock. Like NVIDIA is probably the most important one now, the AI chip darling. So people buy the highs of NVIDIA and then drive it higher because of their buying. And that creates this momentum. And then they get safely into enshrined in the idea that this is going to work, because it does work over short periods of time. Until, of course, what can happen is a cascade of selling can happen. And it will come out of nowhere, and that's called the escalator coming down fast. So we're in a really tricky spot, Terry, where the momentum trading is on until it isn't.
Yeah, that's interesting. In the big picture, you recently wrote that year-end 2024 focused stock traders can overlook any short-term headwinds. So which headwinds are we talking about?
Well, the headwinds are this profit taking. The other headwinds is the Federal Reserve System keeping their short-term policy rates higher for longer, or even hiking. And these things can happen if the inflation doesn't slow down.
Are there any other headwinds to note that can't be overlooked?
The other thing that is a headwind is just the volatility of the presidential election, because it's not going to move anywhere. We're going to have one on November the 5th.
All right. You also wrote recently, of note, is a big value gap that exists between U.S. large cap and small cap benchmarks. Why is that important?
Yeah, so I also pulled that out this morning, March the 28th. The S&P 600 small cap index for 2024 valuations is 15.4, and for 2025 it's 13.2. So just to give you an idea of how wide that is, it's almost 20 on 2025 valuation for the large cap, and it's 13 on the 2025 for the small cap. 13 versus 20, that's a huge, like 35 or 40% difference in valuation. So nobody wants the small caps. Everybody's trading the momentum on the large caps until they don't, Terry.
So it's not time, or is it time for a big small cap run?
It's the magic question, and it's in the bull bear debate at the center. Is there a wider rotation to more styles? Is there a wider rotation to more sectors at this point in the market? That would probably be, if this is a bull market, that is probably what's going to happen. But the jury's out between those who believe a genuine bull market with wider breadth and style and sectors happens, or whether it's just NVIDIA, the AI thing, and a lot of momentum trading on the large caps.
So what does this mean or imply to the growth story going forward?
Well, the growth story actually has been upgraded. We got a 3.4% upgrade to the final number for Q4. And that, the economy in the United States is 2.1% long-term growth. So we're getting a half a point to a point or even more in extra growth out of this AI boom and some of the infrastructure spending and some of the military spending that we're doing on all the adventures out there in the global economy. So growth is holding us up for optimism, other than it's putting pressure on prices.
You also mentioned something in your writing that's interesting to me, that there are a lot of stock trader and covering analyst eyeballs watching for an index-style rotation away from the Magnificent Seven market leaders. So does that mean you might be eyeing a change in market leadership soon?
Broadening, Terry, is probably what's going to happen. I mean, you can see people take profits off these mega cap stocks and put the money to work. However, there seems to be an endless amount of money that wants to go back in and buy the dip. So, like everything, Terry, there's there's markets for reasons and buyers and sellers for reasons. And I can give you the story of the buyers as well as I can for the sellers in a market like this.
Well, analysts have been raising their S&P 500 targets for the year. What are yours?
I have about 48.75 for the fair value at the end of the year. We're at 5,200. So, the question always above fair value in markets like this is if the Federal Reserve money printing that's happened over the last few years can give you that 10 or 15% excess valuation, and we can end the year at 53, 5,400. Not unthinkable. I just think people should remind themselves when the market traces back, it will, likely test that fair value level. So we can go from 450, 250, where we're at now, to 4,800 really quick.
Okay, top-ranked strong buy stocks you're following include ARM Holdings, PLC, Lee Auto, and Vulcan Materials.
Now, ARM Holdings, PLC, this is a leveraging the University of Cambridge University in UK, their research. It basically is run by a bunch of NVIDIA executives in Silicon Valley, but it's using the intellectual property of Cambridge. And it's now recently IPO'd, and it's $125 a share with a target price of $147 and a Zacks rank at number one. So take a look at it. That's your NVIDIA play where the UK gets involved. Li Auto is, kind of the Mercedes, the domestic Mercedes-Benz of China. It's hybrid electric vehicles, $60,000, $70,000 prices that are for big families, carry seven people, Chinese families. So this is only a 9-year-old stock, but I've got an A for value, A for growth in the number two rank. So take a look at it. It does make, for next year, $3 a share. Remind yourself that Tesla next year is making $4 a share. So this stock is worth looking at. The last one I'll give you out is Vulcan Materials, ticker VMC, the southern U.S., all the way from Georgia to Texas and California, based in Birmingham. And they're looking at $9.50 a share in aggregates, concrete, asphalt, sand, gravel. This is the infrastructure play of choice for those who believe the infrastructure package will keep delivering for the market.
Our chief equity strategist and economist John Blank on the market big picture and stock value gap. With John, I'm Terry Ruffalo. Here's something else for you to check out. Aim your portfolio for 24% per year and more. Zacks Ultimate gives you 30-day access to all of our buys and sells for only $1. Get details at zacks.com/promo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.